Good afternoon, everybody, and welcome to this afternoon's webinar on InterCompany Postings from Nolan Business Solutions. So, what we're going to do today is I'll first describe the way that we set up InterCompany Postings and the functionality that it provides, and then we'll go through the products and put on a few examples so you can see it working in action. So, InterCompany Postings has been one of Nolan's products for a number of years, and it was written actually to provide a really easy interface into Dynamics to post between individual companies. So as you know, in different companies inside Dynamics are held within different databases. So what the InterCompany Postings module allows us to do is pick up a transaction entered in company A or the source company and post that into company B or the destination company. So the methodology that we use is what we call either trigger accounts or alternate accounts, and I'll explain those to you now. The trigger account methodology looks at postings to a trigger account from any module in the source company. So inside the setup, we set up a trigger account. It's a real account in the general ledger, and whenever that account's posted to, so the InterCompany Postings module does various things. First of all, it posts a reversal to the trigger account, with the other side of that journal being to the InterCompany control account. So in other words, the expense that's been posted into the source company's chart of accounts gets reversed out and placed in the InterCompany control account. What we then do is we go across to the destination company and we post a journal in the destination company related to the relevant expense account related to the trigger account. And that can all happen automatically. So posting through trigger accounts, we can get it so that the reversal journal and the journal in the destination company are all posted automatically. There's various gates that posting goes through, and what we can do is we can switch those gates to open or closed. So at any point during that transaction, if you want to stop the posting happening, you can do for some human control. So the pros of the trigger account is that by setting up this account, you can post to it from any subledger without any user input, and it automatically produces the InterCompany for you. There's no user input at all. The users don't even really need to know that they're posting to a trigger account or an account with InterCompany on it. That's going to affect the books of another company. The cons is that you need to set up the trigger accounts in the source company chart of accounts. So typically what I might do is I might select a range of accounts which are my InterCompany trigger accounts, define them as a separate section on my chart of accounts so they don't interfere with the standard postings, and but those need to be set up. Because of the reversing journal that happens, those trigger accounts should always have a balance of 0 on them, so they won't affect the figures anyway. So those triggers, and we'll go through and we'll do an example of triggers just now. The second type of InterCompany is what we call the alternate accounts method. So this is where we provide during entry an alternate account in the destination company. So the alternate account methodology allows the entry of the destination company's alternate account when entering GL or purchase ledger transactions. If I was entering a purchase ledger transaction, I would post it in the source company to my InterCompany control account and specify the alternate account being the expense account in the destination company. Again, it posts across to the other side, and that can be done automatically or stopped at any of the gates as it comes through. The pros, obviously we don't need to set up extra accounts inside our source company. All you need to do is set up your separate intercompany control accounts with each of your destination companies. The cons is that it currently works just in the general ledger and the purchase ledger. And if you're integrating these journals in, there's a little bit of work required to integrate them through Integration Manager. But you know, most of the intercompany that we've seen goes through the general ledger and the purchase ledger, and the trigger accounts are used when you're posting in items from other sub-ledgers such as field service or project accounting modules. So let's go across and let's have a look at the software. So very quickly, before we get into a transaction, just look at the setup. And you'll see that in the intercompany setup, we have a number of tick boxes, setup tick boxes here. So I'm just going to, I've got Fabricam US as one of my companies set up, and Fabricam Inc. as the second company. I'm going to use Fabricam Inc. as my source company this afternoon. So my Fabricam Inc. company is also set up as GBP functional. So it's a UK example of the test company, and Fabricam US is set up as a US dollar company. So what I want to show you here today in GP 2015 is the multi-currency functionality as it works with the intercompany as well. So back to the intercompany posting setup. The gates I was talking about is that we've told the system to automatically post source company transactions, so that reversing transaction, I've told the system to automatically post that, to automatically create destination transactions, and automatically post those transactions as well. So from our perspective this afternoon, once we've posted the transaction in the source company, it'll flow through, everything will be done automatically for us. So if we go across to financial transactions first, we go to general ledger. This is the standard general ledger entry window. And I'm going to put a journal on for my expenses. So I've been across to the US and I've incurred some travel expenses, which I want to post across to my US company. So I'll put a batch on, CS expenses. And I'll say that it's the 21st of April as my transaction date, and I'll call this travel expenses US trip. Okay, so first of all, I traveled from home to the airport, so I'm going to post the value across to my 6520 account, and that was £30 for that expense. And so you can see that's posted to travel administration. I'm also going to post 500 6520 £400, and that's the expenses that for the consulting and training that I want to intercompany across to my US company account. So in other words, I've set up 500 6520 as a trigger account. Everything I post into that account is automatically going to be reversed and posted into the US company. My credit is going to be my expense control account, and £430. Okay, so that's my expenses on the system. So when I post that transaction, actually, let's move that. transaction level post here, it's going to print off a couple of reports for me. So first of all, it shows me an intercompany report. So it tells me it's exported journal 3544, which was the journal number I've just entered, to company Fabricam US, and it's created me a journal 3469. I'll be referring to that number when we get across to Fabricam US, so we can see what it looks like on that side. What it's also done is it's created a source intercompany control posting journal number 3545, which 3545, here's the journal report, and what we can see there is it's reversing that £400 that I posted into my travel consulting trigger account and putting the value of that into my intercompany due from Fabricam US account. Final report is the original posting journal report, showing the journal 3544 that we put on the system originally. Okay, so not having to know anything about accounts, not having to do anything except post to my 500-6520 account, that intercompany has now happened for me. Let's go and have a look inside my Fabricam US company. And we'll go and have a look at that general ledger account. Now, inside the trigger, I've told the system that when I posted to 500-6520, I wanted it to post to an account 100-6520 inside my destination company. So if I go into my financial summary, and I look at my 100-6520 account, I can see $600 here. If I drill into that, I can see the journal 3469. And I can also see this intercompany transaction. It's come from source company TWO, which is the database name of my source company, and journal number 3544. So I've got some information there telling me what happened, where the source came from. I can drill down into that, and I can see the information related to this journal. What's interesting about this journal now is that in my source company, I've put my expenses on in GBP. What the system's done is it's posted it inside my US company in GBP for $400. So if we go and view the currency, we'd see $400, the sort of £400, which at an exchange rate of 1.5 gives me $600. So the intercompany has taken the £400 I put onto the source company, converted it to dollars, and posted it into 100-6520 in destination company. One further thing that the Nolan's intercompany has is the ability to drill back on this document, and it opens up the originating journal at 3544, placed in Fabricam Inc., which is travel expenses, US trip, and you can see the whole journal that I put on earlier, to the £400 down here. Okay, so a nice simple example of a trigger account. I could have loaded that expenses journal in using Integration Manager, using Smart Connect. It could have come in via a timesheet entry, an expense entry in project accounting. It could have come from anywhere. The moment it hit that account on the general ledger was the time that it created the intercompany. That's triggers. Let's go and have a look at alternates. I'll go back to my Fabricam company. So whilst I was in the States, I went to a company called a computer company, and I bought some software for my laptop. So I can go into purchasing, and I can go into transaction entry to enter in that invoice. So this is going to be software for Collins PC, and I'm going to put that to a batch, CS. Okay, so company was Computer Training Systems, and the invoice number was CS 2204. And we'll say that the software was £200. It's calculated the VAT for me. We'll see under distributions that it's defaulted in for me the intercompany due from Fabricam US account. So because that account is there, I can go to the intercompany button here, this IC button, and I can enter in the destination alternate account here. So I'll say I want to post that piece to 100-6140, which is my supplies software account. Now that account there is actually an account in my destination company. If I press the lookup button, I do see my list of general ledger accounts from Fabricam US, because those are the accounts that we want to post to. Okay, so once I save that transaction, and go and post that transaction, what we'd expect is for it to post that £200 cost across the US. So let's go and post that batch. What we're seeing here is the payables transaction posting journal, where you can see that I've debited the intercompany due from Fabricam account. Here's the general ledger journal that I created. Intercompany jumps in and says, okay, thank you. You created journal 3546 and I've created you a journal 3470 within Fabricam US. So if we go across to Fabricam US, this time we'll have a look at our software account. $100-6140. You can see a journal there for $300. Again, all the information came from journal 3546 in 2 ink. I can drill down to that journal. And it was £200, which is $300 at 1.5. And I can drill into PMTRN, and I can see the voucher that was entered inside Fabricam, inside my source company, that originated that particular intercompany transaction. Okay. So just to recap there, with my expenses, I just posted the one journal to debit my travel account and credit expense control. What that did inside the UK company is it did an automatic reversal, took it out of a credited travel account and put it into company. And then inside the Fabricam US company, debited the travel account that I nominated, 100-6520. And the other side of that was the intercompany due to UK, 0002750. So we end up with the intercompanies matching off in between the two entities and the costs sitting on the P&L inside Fabricam US. With the purchase of the laptop software, I posted directly to the intercompany, so we didn't have to do any reversing transaction, and I put in the alternate, was my 6140, and that generated a transaction in South Africa and US, which credited the intercompany duty UK and debited the expense accounts on the P&L for supplies of software. Both of those examples, you notice I didn't have to change companies to do the posting. I've just got the system did those postings automatically for me. There's a number of tools in InterCompany that help you reconcile those postings. If postings, for whatever reason, fail, perhaps you've got different accounting periods. One company's closed their month while the other one's still open. Any failures like that can be easily seen on the reconcile windows and reposted should you need to into the right places, keeping your intercompanies in balance. We also have a number of settings whereby we're able to create templates of trigger accounts, of alternative accounts. So you could say every account that begins with a department of 500 is a trigger account, in which case you don't have to set them up individually. The system will take a look at the template setup before each posting and create those accounts for you. So over the 15 odd years that this product has been out amongst our customers, we've been adding on features into the product to make it easier for people to use, make it a really robust product for you. Right, so thank you very much for your time today, and if you've got any questions, we'll be happy to take them. Or alternatively, please email them in to Nolan Business Solutions, and we'll be picking them up and sending you answers. Should you also want to see anything further on InterCompany or any of our other products, please let us know. Be happy to arrange webinars for you on that basis. So thanks again for your time this afternoon. I'll just leave it open for a couple of minutes to see if there's any questions, and then answer those and close it down. Thanks again. Bye-bye.